Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, and we are approaching the final minute of today's trading session here on Wednesday, March 26th. A lot of negativity coming into the market today. However, President Trump is going to be announcing tariffs on the auto industry, and it's coming in after the close of the market. Now, no one can forecast what that announcement is going to be like, but I can tell you the technicals are still pointing lower. I still have my downside target right there on the diamonds at 413.44. And we're looking at a flag pattern. That's an inverted flag pattern. And inverted flag patterns are very bearish, but you have to wait for the pattern to actually break out to the downside. And here we are in the final 2 seconds. There is the closing bell, again, for this Wednesday, March 26th. Remember, tonight we're having a rapid fire stock analysis session from 6 to 7, where I'll be going over at least 50 stocks in that hour. And if you want to try that out, we have the trial membership that you can plug into and listen to the recording if you can't get it live. And I go over stocks just like I'm doing here with the general market. But again, this is a flag pattern. Here's the flagpole, and here is the flag. It's an inverted flag. A bullish flag pattern is just the opposite. You have the flagpole, you have the flag more or less being pulled down by gravity there, and the breakout over the flag would be a buy signal. An inverted flag, the sell signal occurs after the breakout to the downside. So we're still waiting for this area right here to break, and that would be this part of the flag. Remember, it's inverted, so that would be the upper part of the flag. If we get a breakout below that, then the way you measure the target or the measured move is you take the length of the flagpole and you attach it to the breakout point, and that is how far you can actually go down. So that's why I say it's a very, very bearish condition that we're looking at right here, but you have to wait for the trigger. So I still have that downside target of 413.44. We'll have to see what the president has to say. That might add a little bit of a boost to the market. I mean, it's that crazy. We remember last week we talked about the choppiness of the market and being able to navigate in this volatility, but it's extremely hard to forecast what's the next announcement coming out of Washington. So IWM, again, look at that. Another flagpole here. There's the flagpole. Here's the flag. You get a breakout below that, then watch out, lights out. We're going to the downside. And so I still have my downside target right there on IWM set at 201.06. Looking at QQQ, which is the tech sector, it got beat up pretty well today. Again, another flagpole. See, once you see this, you could now identify this on many different stocks. We're seeing the inverted flags on Microsoft, Tesla, heck, Delta Airlines. We're seeing them right across the board, and it's very unusual that you see that kind of a pattern being so pronounced. I mean, like textbook inverted flags all over the place. So again, we'll have to see if the general markets start to break out to the downside, then these individual stocks that I've mentioned are going to do pretty much the same thing. So I still have my downside target on QQQ. I'm not moving that at 470.16. Look at today's candle, big and red, increase in volume on the way down. You do have a pivot, lower high, lower low from the previous day's candle here yesterday. You see that? And we got the sell signal on the CCI. Remember, as I magnify that, you can see when the blue line, which is the CCI itself, crosses below the red line, which is the plus 100 mark, that's when the sell signal is generated. And you can see what happened last time. We had a sell signal after it had gone overbought. I mean, it got smashed there. So be sure to follow these indicators. You cannot ignore them. Like I tell people all the time, especially our members, turn off the television, turn on the charts, learn a little bit about technical analysis, and then draw your own trend lines and forecast lines. Which reminds me, a question came up in the comments field from last week's weekly market report asking how I draw my target line. So I'm going to be covering that on Friday, so don't miss it. Remember, each and every week, and every report for that matter, I try to give you a little bit of an education on how the technicals work. Today's lesson is the inverted flag, right? So next week, we'll talk about how to draw your own price targets. And we talked about ABCD patterns. We talk about bullish and bearish engulfing candles. We talk about pivot points. I mean, I teach you repetition. So if you hear me saying the same things over and over again, there's good reason for that, because repetition is the best teacher. Now, I mentioned this during Monday night's session with our members, the super spread traders. I say I might repeat, but I'm going to change it up just a little bit to make it sound fresh for you, so you're not hearing too much of that redundancy. All right, so QQQ, downside target still in place, like I said, down here at 470.16. Again, look at the flag. There's the flagpole. Here's the flag. A breakout below that is going to result in much lower prices. It's one of the most reliable price patterns that you're going to find out there. And you can see bullish flags along the way as well, and like we're showing here today, bearish flags. All right, going to SPY. This is the S&P 500 ETF. We've got a very well-pronounced pivot here with that big red candle, almost a bearish engulfing candle, but look at the increase in volume on the way down. Remember what I say all the time. If you look at the green here, see how the drop in volume is occurring here on the way up? Well, when you see a drop in volume on the way up, it's telling us that the buyers are getting tired, so that's bearish. When you see the volume increasing on the way down, that tells us that the sellers are becoming more motivated. So again, that is bearish. And learning how to read volume is something that is a must learn if you want to become a trader and learn how to use these charts with great accuracy. So again, there's the inverted flagpole. Now let's talk a little bit about VIX. And we did hit the downside target on Monday right here. You can see that. Now we're showing very, very close to a bullish engulfing candle. If it had opened up a little bit lower, it would be. Not quite a pivot, because we would need a higher low for that. But I think we're in good shape to hit that upside target on the VIX at $20.70. Remember, the VIX, for the most part, is inversely related to the S&P. So if I'm bullish on the VIX short term, that means I'm bearish on the S&P, which I just got finished showing you where my downside targets are for SPY. Down below, what's happening down there? Well, that green line down there on the CCI is the minus 100 mark. And when the CCI crosses over the minus 100 and goes higher, then that is a buy signal. The stochastic has to cross here before that's a buy signal. That's when the %K, which is the blue line, crosses over the red line, which is the %D. That's the moving average of the K. When those cross, you get a buy signal. Those are very, very reliable, and that's why I'm still bearish to the downside and why I have my targets set down there. All right, so that is it. We have a lot more coming down the road on Friday, so be sure to catch that one. If you'd like, subscribe to our channel and hit the notification bell so you don't miss the videos. I really appreciate the comments, the likes, and all that good stuff that puts us on the menu for other YouTube viewers to find us. And that's all thanks to you, why we're growing in our membership. And I really am very, very grateful for that. So thank you so much, and I'll talk to you on Friday. So long.